Hello traders, this is Blake Morrow and you are listening to the week ahead video for August 6, 2017, and I hope you all are having a great summer. Before we get started on this week's video, I just want to make sure I mention that if you haven't taken your trial of ForexAnalytix and you haven't tried it yet, make sure you sign up today. All you have to do is click this button right here. You can sign up for your first 10 days for only $1. Okay, so you can try it out for $1. No strings attached, and you get the top tier automatically. So once you do that, make sure you go and download the mobile app. You can get it from the App Store or the Google Play Store, and this way you have all of our notifications and updates and support and resistance level breaches. You get them all on your phone, so make sure you do that ASAP. All right, let's talk about well, we can talk about the week that was, but what's coming up for this week? Now we are in the middle of summer. Actually, we're nearing the latter part of summer, and the dollar made a really big move on Friday. It's something I'd been expecting for the last couple of weeks. I tried playing the dollar to the long side a couple of times. I would say most of it was unsuccessful, but then Friday, I was really prepared for the move to happen, and I took advantage of it, me personally, and I hope you guys did too, because the signals were there. And I'm going to take you over to the dollar index and just show you what I'm talking about as far as Friday. Friday we had non-farm payroll numbers. The jobs numbers came in. The headline number came in better than expected, and so the dollar did recover. And we've seen this divergence. See relative strength, how the relative strength here is diverging as we are moving lower. And what was really interesting about the dollar index is we actually hit a new trend. Well, we hit a new low past the support, but then we closed the week back above it. Now, if you look at the weekly chart of the dollar index, the weekly chart actually created a hammer candle, which is a bullish reversal candle. Now, I'm not, I've been bearish the dollar this whole year, and I still am, and I've been arguing with myself, and we talked about this last week as well, trying to argue the point that the dollar, there's a good reason to be buying the dollar. I haven't been able to find the good arguing points yet. That doesn't mean there won't be one that emerges, but for right now, I think that the dollar recovery, or any type of recovery that we see, is only going to be a near-term recovery. Now, I trade counter trend just as much as I like to trade with the trend, but whenever I trade counter trend like I am right now, I'm just not very aggressive being long the dollar. The dollar may get a bounce up here towards 95, which could be a fairly short-lived bounce, but it could be the remainder of this week. If you think about this week, the data that's coming out towards the end of the week is what's going to determine how far this dollar index can actually bounce. At the end of the week, we do have producer prices on Thursday, and then consumer prices on Friday. So we have inflation data coming in towards the end of the week. That's the important data that's coming out. So we had such a big reversal on Friday that we might continue to see a little bit of a pullback in some of these majors, and a little bit of a bounce in the dollar. You look at the euro dollar, for example. The euro dollar, we broke this nice little uptrend line that we had, real steep sell-off on Thursday. Sentiment has just been, or excuse me, on Friday, sentiment has just been so over the top bullish with the euro dollar. It was bound to reverse. You had everybody on one side of the boat, and then the boat capsized. That's kind of what happened here. Now, if you look at the euro from a technical perspective, we did hit, or came really close to 127% extension of the range. I want to show you, actually, I'm gonna go over to my charts here on the euro dollar. I want to show you all the things that we talked about last week. We basically hit the previous support from 2010, the spike lows. That acted as resistance. We also had 161% extension of the, you can see the move here from election night, okay, to the lows following the election. We hit 161% extension of that move. We had 127% extension of almost hit here from the highs of 2016 to the lows of 2000. Well, it was the lows of 2016 as well, but that high to low, we came within very close proximity of 127% extension. So the euro, and you can see the weekly candle in the euro dollar. I mean, this is a shooting star, you know. So realistically, I think the euro could pull back here, but the pullback's not going to be, I don't think it's going to be too aggressive. I think, you know, we might get a pullback to, you know, 116, maybe 115 and change, and then resume the uptrend. I try to sit here and figure out, well, what is the argument to be long the dollar? I just don't have any good arguing points right now. I really don't. I think there's a lot of political turmoil. I think the Fed is, you know, nearing the end of its cycle as far as, you know, its tightening cycle, where other central banks are starting to tighten. So again, the argument here is probably more technical than anything. You know, whether we accelerate higher in the dollar or in this case lower in the euro dollar probably has more to do with what happens next week. I mean, if inflation comes in a little hot on a producer level and then also on a consumer level, you know, maybe that is the argument that the dollar is going to continue to strengthen if inflation is starting to rise here in the US. But we've had a lot of false starts with inflation in recent years, so I don't want to get too excited about that. Another big event this week is the RBNZ. The RBNZ is expected to keep rates on hold, but they are meeting Wednesday evening here in the US, Thursday morning in New Zealand, and we saw a really big reversal of the Kiwi. You can see we had a real big reversal from 127% extension of this last trend move. You can see it right here. We had a 127% extension, big rejection. Now we're approaching this breakout point. You can see this. Whoops, that wasn't what I wanted to grab. This blue line is what I wanted to grab. That one right there. You can see that breakout point is coming in play, and that's 73.80. So we could very easily break back below that and maybe retest 73 cents, which is the big triangle breakout point. It would come in here. That'll take us probably right into RBNZ, and whether we dip back into the channel towards the 200-day moving average or we reject and we start moving higher again probably has more to do with the RBNZ towards the end of the week. Now, keep in mind the RBNZ's Governor Wheeler. He is not a big fan, and I can imagine not a big fan of the New Zealand moving higher. He's going to probably try to talk down the Kiwi a little bit here, and maybe that's not even the place that you play it. You might even want to play the Kiwi dollar maybe in the Aussie New Zealand, and the Aussie New Zealand. If you look at more of a longer term basis, you'll notice that we have a big triangle here. We're smack dab in the middle of the triangle. I'm hoping personally that the Kiwi dollar actually strengthens a little bit and pushes us back towards the lower end of this channel, or excuse me, triangle, so we could play it to the long side down there. That's what I hope happens. Right now the momentum is to the upside, which we may reject if we get up towards 109. But I think being in the apex and right in the middle of this triangle will give us an opportunity to either play it to the long side down here at the lower end, or to the short side if we're up at the upper end of the triangle. But again, these are things that I personally am paying attention to going into next week, really focused on the dollar, really also looking at the Kiwi. Another thing that you probably should watch is if the dollar continues to strengthen. I'm going to take you over to silver. Silver put in a pretty key reversal, and so did gold. But you'll notice silver here, we have this double top or really key resistance. We rejected it at 618, and that's actually ignoring that ridiculous spike low that was a very thin, lasted less than a minute. I really don't count wicks like that because it happened in Asian trade. But you know, we also had a bearish engulfing weekly candle here in silver. Precious metals they should weaken if the dollar continues to strengthen. That's entirely possible with silver. And here's a real quick look at gold. Gold actually closed back below the 618 retracement. We also had a pretty bearish weekly candle. This is a possible dark cloud cover, which next week could really confirm a big reversal in gold as well. So just a few things that I'm looking at. It is summer. Liquidity is pretty light, excuse me, bad, which makes for sometimes very poor volatility. But the volatility spikes that you might see are just big order flow that come through the market, and that tends to happen a lot in summer. If I had the option to take this week off, I probably would take this week off, although I am taking a couple weeks. In a couple weeks I will be out for a majority of the week. But anyway, you guys and gals, good luck this week, and do me a favor. If you like this video, click the thumbs up, like button on YouTube. Also, make sure you subscribe to our channel so you don't miss any of these updates, and you get all of our face interviews and daily webinars. You get those right to your subscription. So make sure you subscribe to this channel and also like this video. Thank you so much. I hope you guys have a great week. My name is Blake Morrow. You're listening to the week ahead video for ForexAnalytix. Have a wonderful trading week this week.